with that, I'd like to invite Manoj Vohra and Dr. Qian to come up on stage with me, because we're going to have a discussion now about regional trends in China. Specifically, we're going to look at some case studies of how businesses address regional issues. And the thing that we're really going to focus on is this theme which is developing over the course of the last couple of years or so about changing cost trends within China and whether China is becoming too expensive a place for some businesses to operate, particularly in the coastal areas. So just to introduce him, Manoj Vohra is Head of Customer Research for us in the Asia-Pacific region, so he provides research-based advisory services to clients across the region, which are government, private sector and NGO clients. He's an economist by training, previously worked for us out in Delhi, looking after advisory services in India, has several degrees, a bachelor's degree in physics, but a master's degree in business economics from the University of Delhi. And then Dr. Qian is the Deputy Director of our Access China service. She's based up in Beijing for us. She does our economic analysis and forecasting for China, not just as a whole, but China provinces and right down to the China city level. She had a doctorate from a university in Sweden. She's fluent in Swedish, but today I think she'll be talking in English and Chinese. I think Louise is going first.
Good morning, everyone. I would like to start my part by getting back to one of the questions we had earlier this morning about the first quarter FDI into China. Now, yes, we saw the news yesterday that the first quarter FDI dropped by more than 6% compared to last year. Many news commentators and analysts are blaming China for the rising cost. Is that the case? Yes and no. Indeed, wages have been rising for about 15% on average in the past 5 years. But there's more to that. The truth is, FDI into China are no longer here just for the cheap labor. They're here for the domestic market. And more importantly, they're not moving away just to Cambodia or Vietnam. They're here to stay, but they are moving inland. So, we know that China is big. So talking about China without talking about the different part of China is like talking about Europe without talking about the differences of the Greeks and the Germans. Now, so as Robin mentioned that we have this service called Access China. So we talk about China not just from a national perspective, but also from a regional perspective. So we cover all the 31 provinces and 287 cities. Now this chart, very simply, you can see that one single province can be easily the equivalent to an entire country. Take the province of Jiangsu or Zhejiang, for instance, is the same equivalent to Austria or Switzerland, and just the city of Shanghai is that the equivalent to Finland. So yes, the money is going inland, but exactly where are they going? If you look at this map, now, we did a detailed analysis among all the 300 cities and pick out the top 20 cities here to recommend you where to go. Now, these top 20 cities are based on a combination of the overall economic size, economic growth, population, income, business environment, etc., etc. And what's interesting here is, probably here, that we rank all the cities, and the darker purple color it is, the faster growth it is, and the better we recommend that you put a consideration when you want to open your next office in China. Now, we knew about Beijing and Shanghai and Guangdong, but there's so much more than that. Now, if you look at this red circle here, this is mostly in the provinces of Jilin and Liaoning. So what this place is telling us is, if you're investing into heavy industry, go there. Because according to the 12th five-year plan, there is a revitalization of the heavy industry in that area. And the growth has been tremendous in that area. Another part would be the inland cities. We can see these city clusters, mostly coming from the provinces of Henan, Hubei, Hunan, and Anhui. The reasons behind, one, the labor are much cheaper there. Two, more importantly, the infrastructure is pretty good, and that means you can easily set something up there, and then you can ship it all the way to the coastal provinces. And more importantly, they have some relatively good and comprehensive universities. That means it's very easy for you to recruit locally. We're talking about, for instance, the China Technology science and technology university where basically all the geniuses come from. We're also talking about, for instance, the Wuhan University is big, comprehensive. So this is all these factors are very important for your business. Now there's something more to this. One, you can see this super dark purple area. This is in the province of Inner Mongolia. Now what's interesting in this place is probably you've heard the anecdotes that there was this nanny driving a Land Rover to work. The reason is they're so rich with natural resources. We're talking about coal or rare earth. They're just simply having a lot of cash. They have the job of being a nanny just so that they're not bored. Now we've seen the GDP growth about 20 to 30% real GDP growth in the past 5 to 10 years. So it's very impressive. It's something to consider. And there is a little triangle area around here. And that we're talking about the cities of Chongqing, Sichuan, and Xi'an. Now the Go West policy has made this area particularly interesting. So it's somewhere to be looking at. Okay, now on top of these, there are certain key things that you need to watch for China. One is the fast pace of urbanization. Now, according to the census, we saw that last year, for the first time, that the urban population becomes majority in China. Now, this is very important because, for instance, when the rural farmers move to the urban areas, obviously they would be demanding a new and bigger and better house, which will be a big supporting factor for the Chinese housing market, for instance. And then when people move into a sort of clustered area and dense area, that means sectors of, for instance, retail sales would be very popular there because it's very easy to set up a shopping mall and for people to consume. And according to our forecast, there will be a total of 160 million people moving from the rural area to the urban area. And that's going to be the largest human migration ever in history. Just something to watch for. So, what else is important? If you want to open your business there, you want to make sure that there's enough domestic consumption level there. So I pick out the cities that have a relatively good level of income for your reference. Now I picked the threshold of RMB 30,000. That's roughly about 5,000 US dollar. Now if you do international comparison, somewhere between 5,000 to 6,000 US dollar is really the threshold where people start to consume a lot. Now if you can follow this, as rich as you might think China is, among all the cities, only in 2008 the city of Dongguan passed through that threshold. And then, as rich as Shanghai is, only in the year of 2010. And then as rich as Beijing, you can see it only passed through the threshold in 2011. And please watch how they move along. So we started from just Guangdong, the manufacturing hub. And then we move along the Yangtze River and the Pearl River Delta, and then we start to move inland. So if you follow these cities in each year all the way until 2020, you can see more and more cities are getting richer and richer. The idea of the cities that I pick is that currently their average urban income is that similar to the national level. And the truth that the majority of these cities will be able to pass through this 5,000 US dollar threshold means that if you are attacking the average income people, if you're in that business, you need to move fast because already, can you see, around 2014, 2015, these cities will pass through the threshold. So it's something very important to watch. I'm aware of the time that I'm allocated. So for that, I will keep for now and move it back to Manoj, who will tell us more about the wages, rising cost.
Okay. Well, thank you, Louise. Well, before I start, I do realize that I am the man standing between you and the lunch break. So I'll be quick, brief, limiting my comments to possibly 5-7 minutes, allowing us more time for questions. I do want to take this discussion back to the point which Louise raised in the beginning, with this massive increase in wages and labor costs and other business costs. The question that a number of us are asking, and if I look at this room, half of the companies are possibly selling into China. And the question is this the end of cheap China? Our capacity is going to move to other low-cost destinations in Southeast Asia, and I heard someone suggesting the other day even Mexico, as far as Mexico. I thought that's the key question. I think we need to first understand the context. Yes, labor wages have been rising, not in the last 2-3 years, but they have been rising last 10 years. So if you compare the costs 2002 and 2012, across the board wages have risen by 3 to 4 times nominal wages. Last year, 21 of China's provinces raised minimum wages by 22%. In real terms, 10 to 12%. What does this mean? If I look at manufacturing labor costs per hour, China is now 3 to 5 times more expensive than Vietnam and Indonesia. It's possibly 8 to 10 times more expensive than Cambodia and Bangladesh. Well, the obvious question is, what does this mean for China's manufacturing competitiveness? Well, we need to take a step back and ask ourselves the question, why are manufacturers in China today? And there are 2 broad points I want to make here. Louise mentioned that a few years back, it was simple. Produce in China and ship it to elsewhere in the world where consumers had money to pay for it. That is changing dramatically, to say the least. China is becoming a big consumer market. Our forecast is the next 5 years, that is 2012 to 2016, private consumption will account for 42% of the real GDP growth. Compare that to last 5 years, less than 30%. That dramatic is the shift that is happening. Rising wages also mean more spending power in the hands of Chinese consumers. They want to consume more. They are traveling. They are seeing the world. They want those goods and services here. That is an opportunity. That's one point. Second point, when I talk to clients and when they ask us this question, tell us what's happening with the operating competitiveness, can you forecast the costs for my industry? We need to look beyond labor and wages. That is a very narrow assessment of this issue. You need to think of labor size, you need to think of labor skills, you need to think of supplier base, you need to think of logistics, you need to think of a number of other things. I was in Singapore last week. I was sitting with a bunch of senior managers from a Japanese company, have manufacturing facilities across Asia, including one in Indonesia. They have moved some of their capacity and production from China to Indonesia, thinking it will save costs. And now they all gathered in Singapore just to find out why they were not seeing those costs. They were not seeing, because any benefit that they were getting out of saving those labor costs is being offset by poor infrastructure, delays in shipments. That's the kind of thing that one needs to take into account when you think of this whole operational competitiveness. Let me very quickly show you some evidence to support both my points. First on demand, right? When you think of China as a consumer market, and this chart is telling, what I have here is on the horizontal axis, personal consumption as a percentage of GDP, and on the vertical axis, the rate at which it's growing. And look at where China is and where it needs to be, where the US is. That shift will be dramatic, will create a whole bunch of opportunities. Already, by 2015, China will be the world's second largest consumer market, overtaking Japan. It will consume 15% of the world output, the kind of goods that the world will produce. Our company is prepared. Many companies I talk to here, they do believe that they understand China. But when you talk to them in greater detail, there are issues. Do they understand how the demand will take shape at various provinces, cities? Louis shared with you, how income levels are moving inland, and sometimes there are surprises there. We have a client, in here, and it's a large pharmaceutical company, has a product which is targeted at affluent Chinese. So one would assume that you've got a product that only wealthy Chinese can afford, so it'll be selling very well in provinces where income levels are high. Well, that's, in theory, that sounds like it. But when they actually looked at their sales data, the product was also selling a number of other provinces, which the income data doesn't really tell are the potential markets. So, in fact, Louise's team worked with that client and we developed a wealth model. It's called the China Wealth Model, trying to predict which are the provinces which can consume some of those products which are targeted at that level of the market. And that was telling because the company was able to identify provinces that they weren't even thinking of. That's just one example, and I can talk to you about several experiences where we're seeing companies now trying to understand in greater detail how the demand is growing, not only in terms of volume, but what are the things that are sort of shaping the nature of that demand. So that's one. Second thing, the point about supply chains, and again, in the same session with those Japanese managers, they asked me, can you find me another China? And I took a 5 minutes break and I said, I'll submit my report in 5 minutes. And I went back and I gave them 3 pieces of paper and they all had China, China, and China. Because that's how it is. If you look at this graph, so I have manufacturing labor cost per hour on the horizontal axis. On the vertical axis, I have World Bank's Logistics Performance Index. And the size of this circle tells you the size of the labor pool. And this is where China is. You can see other emerging markets where they are. The only country that can rival China in terms of scale is India. But it has its own share of problems, and rather big problems. Poor infrastructure, bureaucracy, corruption. It'll take several years, several years before it could really rival China. That's one. Productivity. We talk about costs, but as an economist, I can tell you that's not how you should look at it. Also look at productivity. Productivity in China has been rising rapidly. There's a growing trend. Look at the chart here. It's double to some of the other markets that possibly you're looking at as alternate investment locations. It'll grow rapidly in the coming years. So when I look at this, yes, costs are rising, they're soaring, will continue to rise, expect low double-digit growth in wages in the next 3 to 5 years. That's not going away. But there are compelling reasons. Large domestic market that now even Chinese companies, as they bring product home from their acquisitions, are trying to go after. Large labor pool, the flexible supplier market. In fact, UNCTAD, which is the United Nations Conference on Trade and Development, they released a report recently, and they said China is the world's most connected economy. Even among developed markets, when it comes to trade links, it's the world's most connected economy. That is the strength of the China's scale and the supplier system. Now, the bottom line is, yes, costs are rising. Some sectors are going to suffer. Highly labor-intensive sector, garments, apparels, no-brainer. Labor costs account for 60, 70%. No matter how I cut the dice, some capacities will move. And that's already happening. New textile capacities, as we see, are now going to Vietnam. Some are going to Indonesia. Some possibly are going to Bangladesh, Cambodia. In a 3 years' time, if Myanmar makes the right noises, possibly there. But what does it mean for you as a business? And when I talk to our clients, there are 2 things that come to my mind. One, growing domestic orientation. It sounds very simple, but there is a deep meaning to it. So not only you need to understand how demand's moving in different provinces and cities and regions, but also the nature of demand. Another example to share with you, we have a client who's a high-end office furniture manufacturer, sells into China, and we've been helping them forecast demand for office furniture in different provinces. This year, they came to us with another request. Not only tell me the volume of demand, but I also want to know which industries are driving that demand so that we can understand the changing preferences and choices so that we can alter our products well ahead of our competitors. That's the kind of stuff now companies are beginning to talk about. So that's one. Domestic market, it will see a greater focus, not only in terms of where to sell, how to sell. Understanding your consumers, how growing adoption of technology, for example, changing demographics will change consumption patterns. Those are the questions that you will need to ask in specific to your businesses. Second thing, which is more more to domestic Chinese companies move up the value chain. There is absolutely no alternative. If you look at history, no country in the world has survived more than 20, 30 years the low-cost arbitrage. It has to pass on the baton. It has to. So they have to move up the value chain, move into products that are high value, more innovative. So think of Mindrays and Huawei's of the world. We need more of those. Of course, there is a political angle to it that it needs to allow more access and more sort of free space to the small and medium-sized companies, but that's definitely a big imperative. Now, just to conclude, yes, costs are rising. Expect that to be another noisy issue in the next 2 to 3 years. It will put pressure. Some companies will simply have to learn to live with slightly lower profitability margins. But we are not seeing any stampede. Companies closing factories here and rushing to Indonesia or Bangladesh. We are definitely not seeing that, so I want to address that issue very clearly. At the same time, companies can't afford to sit on their hands. They need to figure this out. You need to figure this out before your competitors would. So think of domestic demand, think of ways of driving efficiencies, think of ways of driving innovations. Those are the things that we see many of our customers now beginning to talk about, and I'll be happy to share with you some of my experiences with those. Thank you very much.
Thank you, Manoj and Luke. I've got a question, and then I'll throw it over to the audience, but it seems to me that the obvious thing to ask, confronted with that kind of data, is that clearly lots of businesses think about moving inland in this kind of environment where they see costs very high, and particularly so in the coastal areas. And if you do go inland, you'd hope to get your labour costs down, but presumably some of these softer factors around doing business and logistics, those sorts of things, they get worse as you go inland. How do you go about balancing those two things out and actually helping a company decide whether it's worth doing or not? How do we actually do that?
Look, you raised a very important point, Robin. Many of companies we speak with, they tell us the same thing, that the moment we move inland, we started facing some of the challenges that we see with moving to other low-cost destinations, poor infrastructure, regulatory environment that tends to be far more predictable than they see in sort of more mature and coastal provinces. The way companies are going about doing this is not putting all their eggs in one basket. So they are moving, so if they look at their manufacturing value chain, they identify parts of it which are low value add, low risk, and they have started moving some of those to inland provinces, still keeping some of the capacity in coastal areas. So they are staying with coastal areas despite relatively higher costs compared to inland provinces. The way I see this trend shaping up, in another 3 to 5 years, when you see some of those inland provinces develop infrastructure, you will see some greater manufacturing move there, particularly new capacities that will come up from new investment. You will see most of them going to those provinces.
Are there any questions from the floor? No one's interested in labour? There's a lady there.
谢谢，我来自 Legend Capital。有一个问题请教下刘倩博士，就是未来的5年的话，因为中国看到几个力量，一个是城镇化，但另外一方面中国的人口也在消失，就是老龄化，所以这2个力量综合起来，对中国的经济特别是消费会产生怎么样的影响？想请您评述一下，谢谢。谢谢，这是一个很好的问题，因为中国的人口这边的变化是对整个将来这个中国的经济发展是有很大的影响。尤其经常我们会接到很多的这种问题，说可不可以把中国和印度的这个经济进行对比？那么说印度在这方面，就文老师这边可能会比较了解，就是印度的这部分所谓的人口红利，就是对经济增长有非常好的这个影响。总的来讲，据我们现在预测是大约到2025年左右的时候，中国的这个人口会到达最高峰。但是呢，由于我刚才提到城镇化进程的影响，大约是在快到2039年是我们现在预测，就2039年的时候，在 urban 的这一部分才会到达人口最高峰。所以，而且现在很多的这种 business 其实都是主要是从城镇化这边来发展。所以，我觉得我们在讨论这个中国人口的问题，不应该仅仅看 total 的人口，而应该看这个 urban 人口这一部分，这是一个很重要的一点。
你好，我是那个林中联投资公司啊，我想问一下，中国现在90后已经开始出来工作，你怎么评价90后出来以后对中国的这个劳动力成本，也就是劳动力应该叫什么生产效率的问题？因为我举个小例子啊，我在香港，因为我经常去香港，那香港的茶餐厅或者说餐厅的服务员，跟深圳对比的话，它的一个劳动力起码相当于中国深圳2个劳动力。那香港的服务员的人工可能会达到8000港币，对比中国，跟深圳来比的话，基本上，可以说香港现在的服务员成本可能跟深圳是一样的。好，谢谢。
谢谢。服务业这边是一个很有意思的现象。首先说，刚才我们也提到，就是说，比如说这个外商直接投资，再回到我刚才说的，就是昨天出来这个数据，其实早在2008年的时候，外商直接投资在服务业这边已经早早超过了这个制造业这边，所以真的现在到中国这边投资，不是要为了它这个 cheap labor 或者说所谓的血汗工厂，而是走服务业。但是服务业中国这边其实有很多的还要发展的地方。如果你看服务业的这个 labor productivity， 然后和我们中国的制造业比，大约只是制造业的70%左右，所以这部分还有很多要成长的空间。那我们一般对这个企业的建议就是说，你不要期待中国政府会对你在这方面有很多的帮忙。其实政府是很想促进所谓这种创新，让大家有更多的这种创造力，但是更多的时候呢，因为我们的这个经济发展得很快，市场变化得很快，在很短的时间之内，可能对不同的 labor 就有一个很新的变化。所以一般我们的建议都是说，如果你要到中国来，尤其你要到 inland provinces 去的话，你应该带好自己的这种 training program。那我们也看到，比如说像 IBM， 像 Intel， 他们进来的时候都会 set up 一个这个 training center 或者 research 这个 center， 这都是一个很好的方法。
I'm actually going to bring this session to a close, as I'm very aware, as Manoj said, that we are between you and lunch, and there's a lot to get through this afternoon as well. So I'd like to thank my two speakers, so Manoj and Lou, for everything that they said about China and the way that cost is developing there. So thank you very much.